Ladies and gentlemen, good day and welcome to Electronics Mart India Limited Q4 and FY'24 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantee of future performance and involve risk and uncertainties that are difficult to predict. As a reminder, all participants' line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Bajaj, CEO of Electronics Mart India Limited. Thank you, and over to you, sir.
Thank you. Good evening and a very warm welcome to everybody present on the call. Along with me, I have Mr. Prince Devarakonda, our Chief Financial Officer. We have uploaded our results and investor presentation for the quarter and year-end FY'24 on the stock exchange and company's website. Hope everyone had a chance to go through the same. In FY'24, the segment has observed a robust surge in consumer demand for premium appliances. It includes large-screen televisions, smart inverter ACs, spacious refrigerators and top-loading washing machines, among others. Concurrently, appliances presenting a compelling value proposition, combining connectivity, convenience, comfort, and energy efficiency have sustained positive growth. Anticipating a robust performance, the consumer durable and electronic industry is poised for a double-digit revenue surge in FY'25. This optimistic outlook spans across diverse markets, emphasizing the significance of premium, value-added, and feature-rich products driving the industry's growth trajectory. To share an update on the store openings front, in Q4 FY'24, we opened 12 MBOs. Out of these, 4 MBOs opened in Andhra Pradesh, 3 opened in Telangana, and 5 in Delhi NCR region. In FY'24, we opened 33 new stores. Our store count at the end of March 24 stands at 160 stores, 147 of which are MBOs and 13 are EBOs. Out of 160 stores, 137 stores are leased, 11 are owned, and 12 are partly owned and partly leased premises. As on date, we are present in 62 cities across 4 states. To give you a comparison, region-wise stores opening, out of 32 new MBO stores opened in FY'24, 13 stores opened in Andhra Pradesh, Telangana, which also added 30 new stores, 6 stores opened in Delhi NCR region, and 1 new store of EBO opened in Delhi NCR region during FY'24. Given the healthy cash flows from operations in FY'24, we are optimistic on the future cash flows from operations being effective working capital management, and hence almost all future store additions will be well funded through internal accruals and remaining IPO proceeds. Coming to Q4, we have delivered robust growth of 15% revenue year-on-year at rupees 1524 crores and 15% year-on-year increase for FY'24 at 6285 crores. Our EBITDA for Q4'24 stood at 108 crores, and for FY'24 it stood at 449 crores. EBITDA margin stood at 7.1% for Q4 FY'24 and 7.2% for the whole financial year of FY'24. Our SSG for quarter stood at 7.3% for FY'24 and stood at 8.4% for the whole year. On account of investment made to open our new stores in geographies, that is NCR, the company has increased investments in brand building, sales and marketing, for which it expected that the EBITDA margins will improve as revenue throughput from new geography stores will increase eventually. Also to highlight like-to-like sales growth in FY'24 region-wise, starting with Hyderabad city, which grew approximately at 9% for 68 stores, Telangana, excluding the Hyderabad stores, 17 stores stood at 11%, Andhra Pradesh grew by 22% for the 28 stores, and Delhi grew by 95% for the 14 stores. Our store productivity per store on per square feet is visibly comparatively little lower due to the 6 MBO new stores that we opened in the month of March in Q4, aggregating to an approximate of 38,000 square foot. So comparative numbers look flat or reducing, though practically it is not the case. Also to highlight on the operations of few stores in FY'24, few of the stores in Telangana and Delhi region were ready for operations, but due to some hindrance, we did not commence the stores during that period. We are concentrating on strengthening our position in the areas where we currently operate before exploring newer markets. This This strategy has allowed us to establish a brand in markets of Telangana and Andhra Pradesh. This not only helps customers in those regions connect with our brand, but also familiarize them with our range of products. It enhances our understanding of the market and preferences of our customers. We are confident that this approach will contribute to achieving a significant market share and establish dominance in our current markets. Our future plans involve future expansion in our store network in Andhra Pradesh and Telangana. Additionally, we aim to gradually extend our presence to the NCR region and deepening our roots there. Following a focused expansion strategy based on defined clusters. Our proficiency in local market dynamics, efficient supply chain management, and strategy inventory control have contributed significantly to achieve high-end cost competitiveness and consistent profitability. The customization of our product assortment and maintenance of a comprehensive portfolio play a pivotal role in securing enhanced visibility, brand recognition, deeper market penetration, and an expanding customer base. We provide a complete and unique shopping experience to our customers by showcasing a wide range of electronic products under one roof in our MBO model and providing a specialized brand experience with our EBO model. We work with limited brands but in huge volumes as compared to other players who have more brands on board. This gives EMI a competitive edge and better bargaining power with top brands versus the top peers. With this, I request Mr. Princess Devarakonda, our CFO, to update you on the financial performance. Thank you all.
Thank you, Karan sir. Good evening and warm welcome to all the participants. Now I would like to present the financial overview of the company for the fourth quarter and the financial year 2024. Our revenue from operations for Q4 FY'24 stood at 1524 crores as against 1327 crores, a growth of 15% year-on-year. And for FY'24, our revenue stood at 6285 crores as against 5446 crores, with a growth of 15% year-on-year. EBITDA for Q4 FY'24 stood at 108 crores as against 91 crores, as a growth of 18% year-on-year. And for FY'24, EBITDA stood at 449 crores as against 336 crores, recorded a growth of 34% year-on-year. EBITDA margins for Q4 FY'24 stood at 7.1% and for FY'24 stood at 7.2%. PAT for Q4 FY'24 stood at 41 crores as against rupees 36 crores, a growth of 12% year-on-year. And for FY'24, PAT stood at 184 crores as against 123 crores, shown a growth of 50% year-on-year. ROCE, ROE on an annualized basis for FY'24 stood at 17% and 13.4% respectively. The working capital days as on 31st March 24 stood at 74 days, which was mainly due to stocking of inventory to meet the demand during the upcoming and ongoing summer season. Both the gross debt to equity and net debt to equity stood at 0.5x and the net debt to EBITDA stood at 1.4x. Our cash flows from operations stands at healthy 160 crores for FY'24. As a result, the cost of borrowings got reduced by 7% year-on-year in FY'24, in spite of 26% increase in the investments in inventory and receivables. For FY'24, same-store growth rate stood at 8.4%. For FY'24, around 45% of our revenue came from large appliances, 42% from mobiles, and 13% from small appliances, IT, and others. About 98% of our revenues comes from the retail segment, and the top 5 brands contributed around 60% to our revenues. With this brief presentation, I open the floor for Q&A. Thank you, everyone.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Devanshu Bansal from Emkay Global. Please go ahead.
Sir, hi. Thanks for the opportunity and congratulations on a strong margin performance in FY'24. This time around, OEMs have reported very strong numbers for AC sales. However, the same is not reflecting into our top-line growth for this quarter. So, Karan, what is the reason for this? If you can elaborate on this, please.
Hi Devanshu, good evening. Devanshu, see, usually with seasonality products, firstly what we look at, or what I would suggest personally to look at, not 1 month or a quarter end period, I would suggest to look at on an annual basis or a half yearly basis. They usually internally look at it from Jan to June. And then it depends on, when the peak heat summer starts off in the region that we're operating. So I would say that March last week picked up really well for Hyderabad. April first week really picked up for Telangana upcountry market. Second week was really peak for Andhra upcountry market. So we would look at a blended growth number, and we're really happy with what numbers we've delivered. So probably you would see that reflection on the growth of that particular category when we would talk about Q1 FY'25 numbers in the coming times. But then we're quite happy with what we performed. So last year, if you look at our March numbers, the base itself in March and April was very high again. So, and then last year, the festival period of Ugadi was in March, compared to that happening in April this year. So periodically, we would look at the peak coming in different periods. So these are all localized festivals, localized periods. So all these matter a lot. But हम लोग जो देखते हैं, हम लोग पूरा blended देखते हैं कि Jan से June कितना growth आया है, and then that is in line with what you would hear from the market coming through.
Got it. So you're saying Jan to June should more or less reflect with what OEMs are.
और दूसरा देवांशु, दूसरा क्या होता है कि आप OEM का अगर नंबर देखते हो ना, तो OEM का क्या होता है, सीजन स्टार्ट होने से पहले बिलिंग के ऊपर होता है. बिकॉज सी फॉर देम द प्राइमरी हैपेंस व्हेन दे बिल इट टू अस, राइट? एंड फॉर अस इट वी स्टॉक अप एज अर्ली एज Jan, Feb, March. So for them, that quarter numbers look higher compared to what we start selling only March, April, May में वैसे.
Got it. And Karan, one more follow-up on this. So whatever OEMs are reporting, so that should be reflected in only part of our business, which is AC, ref, etc., or that kind of a growth can be sort of reflected in overall business as well.
See Devanshu, again two things. आप जैसे certain category बोल रहे हो ना, तो होता क्या है कि कोई particular category का demand, जैसे for example this quarter और this summer refrigerant quarter होता है ये, जहाँ पर cooling products go up. So not like a Diwali quarter where all product categories go up equally well. So this will only be focused on the cooling product category like air coolers, air conditioners, refrigeration products. So you would only see a spike, majorly spike, or the major growth coming in these categories first, compared to follow up by mobile IT as a category, then audio, then home appliances, and washing machine, like for example, would be a little much slower compared to other quarters in this quarter because the cooling product demand goes up. So it is not necessary that all product categories would give you a similar demand trend.
Got it. And cooling in Jan to June is what percentage of your business, Karan?
Overall blended it will be around 15%.
For first half of the year as well?
For the annual I'm talking about.
Okay, got it. And you indicated that the premiumization trend is going on well, but our ticket size growth was 2% for full year. Just wanted to check, as in, is this a reasonable level to bake in, or this was an aberration and trend should improve from here on?
So see, it all depends ना. अभी जैसे टेलीविजन में स्पेशली हमने एक कैटेगरी पे अच्छी ग्रोथ देखी है. एयर कंडीशनर प्राइसिंग अगर आप देखोगे तो ये साल इतना कोई ग्रोथ आया नहीं एसी प्राइसिंग पे. तो प्राइमराइजेशन जब हो भी रहा है तो इन टर्म्स ऑफ फीचर्स हो रहा है, बट नॉट नेसेसरी दैट इट वुड रिफ्लेक्ट इन द ASPs गोइंग अप एज वेल ड्रास्टिकली.
Got it. And last question from my end, Karan. This working capital has increased by about 230 odd crore in FY'24, and we have opened about 33 stores. So this implies about 7 crore per store. So is this the optimal level of inventory that we stock in a new store, or there was some comment around stocking up, etc. as well? So, your thoughts on that, please.
So there are two periods that you actually have to look at in our business, or especially with us, is that summer quarter na, before that we start picking up inventories. So अगर 31st March का number देखोगे तो our inventory levels are around 900 crores plus. That is majorly because उसमें 400 crore का तो cooling product है. Okay, number one. Number two, the second period that you will look at is during Dussehra Diwali. So that is a period when we again start picking up a lot of inventory across categories. So these are two periods where you will see a higher inventory count, and the Diwali wala quarter usually ends up by 31st of December. So you would see a lower inventory number there. But the peak of the seasons would come in October, November and summer period, that is March, April. So these two quarters you would see a higher inventory levels on the books. And so is the working capital requirement higher as well.
Typically for a new store, what is the inventory that you sort of...
Around, so the display, so two things there. Again, if it is only display per se, it would be around 2.5 crore rupees, and usually the over-the-counter products like mobile phones, kitchen appliances, accessories, laptops, would have the backup in the store. So that would be another 50-70 crore rupees of stock, 50 lakhs to 70 lakh rupees of stocks. So that would be around 3 crore rupees of stocks in the store of a new opening.
Got it. Understood. Thank you. Thanks for taking the question.
Thank you very much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Percy from IIFL. Please go ahead.
Hi, sir. Looking at your North Cluster sales, last year, Q4, it was 53 crore, now it is 69 crore, so which is about a 30% kind of growth. I think, correct me if I'm wrong, the number of stores itself, YOY, would have gone up by more than 30%. So why is it that we are not seeing a ramp up in the sales per store?
Hi. So very rightly said that, you look at a 52 crore to 69 crore jump in Q4, that would add up to around 30% approximately in growth. But the new stores that we added up in Q4 versus Q4 on that financial period was on the 30th of March on 24. So we launched 6 new stores during that period itself, on the last 2 days of the quarter end. So it is not that, so the sale that you actually see, or the growth that you see is from the like-to-like stores only, whereas the new stores were all opened on the 30th of March itself, 2 days prior to the year end.
So sir, what would be the, if I take a quarter average, weighted average for the number of days, how many stores were open in Q4 FY'24 in North Cluster?
6 stores.
No. I'm saying total number of stores which are open in Q4, weighted for the number of days they were open, they would be what, 14-15 stores, right?
Yeah. So we were operating 14 stores totally in that region before, and we've added up for 6 more stores during that period, with plus one MBO as well, one EBO as well. So out of which the opening of the stores were only there for 2 days for that quarter in Q4 for 6 stores.
And similarly, sir, can you tell me the average number of stores which were operational in North Cluster in Q4 last year?
14 stores.
Sorry?
14 stores.
No. In Q4 last year, how many stores did we have in North Cluster?
In Q4 last year, only 14 stores were operational. 14, and versus this year, in Q4, it was 21 stores.
Oh, okay. So, basically, there has been no store addition.
Addition of stores, yes. वही आपको बोला था, there is no addition of the store. तो आप जो growth देखोगे, वो सिर्फ like for like store का आया है बस.
Understood. So the SSSG growth in the north region is like 25-30%.
हाँ जी.
Understood. So, how does this work out in terms of store economics? So, supposing if we have to get to, let's say, a pre-Ind AS EBITDA margin of, let's say, 5 to 6% in North Cluster, what kind of sales per store do we need, given the economics there, given the rental would be maybe a little higher or whatever else? What kind of sales per store will give us a 5 to 6% pre-Ind AS EBITDA margin in North Cluster?
So North Cluster will give us that number upward of 35 crores average per store.
35 crore.
Yeah, net of GST.
Understood. Because you see, the reason why I'm a little confused on this is that if we look 1 or 2 years ago, where North was not there at all, we were making maybe around a 5.5% pre-Ind AS margin on the entire company, and at that time our sales per store was about 45 crores.
Correct.
So, why is it that we will make the same margin in North India at 35 instead of 45? I thought it would be more than 45, given that the rental, etc., would be a little higher.
Yeah. So, see, the Delhi so the numbers that we were discussing right now, so that pertains to most of the stores that we bought out there, especially the higher rental stores. So we've invested a lot in buying out property, so the actual rent would not be there in terms of that calculation.
Okay. So rental property is there, and that's why.
Exactly.
Understood. Secondly, can you give us some idea on what kind of SSSG you are targeting for FY'25 at an overall company level?
So sir, including the new stores, SSG अगर हम लोग देखते हैं, we look at stores which we opened, which are operational for a whole financial year. So for those stores, we would look at a comfortable number of 9 to 10%, and including the newer store opening, we would look at, because depending on which quarter we open the store, so we would look at a blended growth of around 15% plus comfortably.
Understood. And last question, in FY'25 on a full year basis versus full year FY'24, do you see any levers for margin expansion, EBITDA margin expansion, or would it be roughly at the same level as FY'24?
So sir, if you see, there already an improvement that has come in place. So, you would see a similar line of EBITDA margins coming up, because in our industry it's become very difficult to actually extract higher margins, because the cost of rental, manpower, advertising, so a lot of things involved, especially now with digitalized payments, credit card penetration going up, NBFC costs going up. So these are all costs that we actually can't control because they're directly linked to the mode of payments and all. So I think we would look at a similar number also going forward.
Right. And final question, if I look at mobiles category, we all know it is a low margin category, but it is also a high throughput category. So at a gross profit per square feet, the absolute rupees gross profit per square feet, is it inferior to other products, or it would be in line with other products?
So if we look at that absolute number in terms of percentage, it definitely would be lower than the large appliance as a category. But then if you look at the churn, so what we look at mobile as a category, we would rather look at the number of rotations of the churn that we would do for that category. So in that sense, it would boil out to a similar percentage.
Okay. Yeah, that's all from me, sir. Thanks and all the best.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Manoj Gori from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. I have one question. When I look
Sorry
at
to interrupt you, sir. May I request you to please use your handset?
Is it better now?
Much better, sir. Please continue.
Thank you. So I have one question. If I look at the overall breakup, probably if I derive the revenues for small appliances, mobile phones, and large appliances, there seems to be some impact on the small domestic appliances during the fourth quarter, and that by some margin. So probably, as per my calculation, it should be more than 30% decline. Is that understanding correct? And if yes, probably how do you look at the small domestic appliances going forward? Any outlook on this?
Okay. Good evening. So actually, if you look at the kitchen appliances and the other categories that we've demonstrated, when say other categories, there majorly pertains to accessories and other product categories which we were in midst of revamping at the store level, and we wanted to introduce newer brands and streamline that process, because that product category like screen guards, cases, headphones, there is a lot of change of models or attrition there in terms of loss of unsold products. So we had to take a strong step where we had to revamp that whole category again and start off from scratch. Create a model where we've tied up with brands where they take the stocks back after every quarter, whatever stocks are left with us, so that we don't have the loss of inventory at the end of the year or dead stock with us. So that is why we had stopped the sales for that particular category in a way, and now we see that growth coming back again on track for those categories as well. And to an extent, like ultra wet grinders or mixies or rice cookers, In the kitchen appliance category, there we see a steep degrowth is because of the utilization of the product, because now everything is like ready to make idli maker, so people are now actually picking up ready to make rather than cooking or making that dough at home. So that category is where we see a major degrowth, whereas categories like fans, water heaters, water purifiers, vacuum cleaners, we see a decently growth coming in.
Right. Right. So probably the growth rate might differ for at least for in the near term for this category.
Absolutely. You're absolutely right.
But it should be back on track somewhere around, on the expected line, somewhere around from second half of FY'25.
Hopefully, because we've added up new categories as well. So like right now we're focusing on built-in category as well. So hob chimneys along with microwaves, built-in appliances, built-in ovens. So that is a category that we're expanding because the ASPs are quite higher there compared to the traditional microwaves, hob and chimneys. So in the coming times, we are experimenting with few of the stores, like 7-8 stores right now in this quarter. So probably in the next coming quarters, if we see good results coming in, that will add up to a higher value coming forward.
Right, sir. So my second question would be on the north market. So probably this is the first full summer, or probably undisrupted summer that we are witnessing in the north market. How has the overall experience been into this market? Probably if you can throw some light on the learnings and how do we see this market moving, ramping up for us in the years time frame. So if you can share your thoughts over here, that would be helpful.
Right. So definitely no complaints on north as a market in terms of the heat wave going on there. Definitely supporting us with a sellout. Productivity per store is what we look at. That is also on track. But then when we look at the market size, that was the reason that we entered that market, right? So when we look at the market size, we would rather now start looking in the future that how do we capitalize on that growth story there? How do we grow more? How do we deepen our store, increase our productivity per store like the way we do back home in Hyderabad and Andhra Telangana? So that is a future goal for us now. We would not, the numbers are good, but then there's nothing that in terms of to be happy in, what numbers we're delivering. There's a long story for us to grow there. It will take long more time for us to establish ourselves there. But we're quite happy with what is happening in that market today.
Right, sir. So lastly, you targeted to achieve that break even by fourth quarter of FY'24, and you were almost running that. Where do you see yourself by end of FY'25 in terms of margin trajectory into north market?
So in terms of growth rate, it will be in line with what you've seen. So we'll see that kind of number coming in, especially now. So right now we are in good summer there. I don't know how long the summer is going to last. Probably might last for a couple of weeks, probably a month. So we are ready with the stock, we're ready with the stores. So it all depends on seasonality products doing quite well there, number one. Number two, in everything, if you look at the average during the other months and during the upcoming Diwali season this year, I think if things are on track, we should be doing a decently good growth there in that region.
And so on the margin front, should we see...
Margins will all remain the same, more or less, because they'll be adding up of new stores as well for this coming year as well. So expansion in Delhi is going to, or that region is going to be heavier than other regions. So our focus is going to be on that region right now. So definitely you would see a similar margin throughput only until unless the stores get matured in the next couple of years, they start delivering a higher throughput. That is when we would see all the costs coming under control, because right now we're spending a lot more on marketing. So once those things come under control or in line with what we do back home, then you would see a higher EBITDA margin coming through from those stores.
Sure, sir. Thanks for this and wish you all the best.
Thank you very much.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Ankit Kedia from Phillip Capital. Please go ahead.
Sir, two questions from my side. If you see one of your competitors, Croma, over the last 1 year has expanded that right format aggressively, which is predominantly a reseller for iPhones. And we have other players also, expanding that. Are you seeing a lot of your premium customers move out of your store and, buy from those type of reseller stores of iPhone in the market? Two, is that business model very different, and in your core Hyderabad market, you could contemplate such a store format yourself and retain those customers and expand in that iPhone category?
Good evening, Ankit ji. Ankit ji, we also do have some exclusive stores for Apple, especially in our tier 2, 3 towns. If given a right opportunity, a right chance, we would like to expand that exclusive brand outlet format as well. But always running an exclusive brand format store is limited to a particular product range or a brand, right? And there are limitations in terms of how much you can deliver out of a store. So there is an advantage that you are brand exclusive. There is a disadvantage that the store sizes are smaller, the throughputs are lesser. You're limited to a certain category of product, whereas a multi-brand store give you a leeway of selling multiple range of products and a higher range of products with the larger store format. So exploring an opportunity is always open with us. We already have that format with us, and that's doing quite well for us. So that is all decided by the brand, especially with Apple. So they tell us where to open, or they tell us which market to look at next. And then definitely initially for those stores the cost is a little higher because the investment goes from the retailer first, and then Apple has a contract of reimbursing it over a few quarters. So the business for Apple anyways with us in our multi-brand store is also increasing. At the same time, what we've proposed is to renovate few of the zones of Apple in our existing stores and make the display area larger so that customers can experience a wider product range from Apple and at more ease with the similar concept of what an exclusive Apple store would have. So that again is in pipeline. So given an opportunity with any brand or any product category, we would like to expand with them in either of the formats, either give them a higher space area as per the throughput in our multi-brand stores, or come out with an exclusive brand outlet opportunity. So, but then exclusive brand opportunity would be more through the manufacturer or the OEM to decide and then move forward rather than the retailer himself.
So what will, when you say in tier 2, tier 3 markets, you have already done that. So these are like the EBOs, what we have, or these are also MBOs and with a larger share given to Apple for you in those markets?
So those markets,
I'm talking from a Telangana perspective, to maintain your market share, right, in that state, will that become important for you to not let other players get that real estate also in a mall or next to you, selling the same product and accessories around you?
Correct. Very, very truly said. So a few of the key areas or markets where we already have our MBO stores, where we feel that the productivity of this particular category is going up. If Apple or any of the brand feels that there's a requirement of an exclusive brand outlet, then obviously we would be the preferred partner, or if we get an opportunity, we don't leave it. So we have stores beside our multi-brand stores also, or stores on a standalone area where we don't have a multi-brand store but an exclusive store for a few of the brands. So it works both ways. And as you correctly said, the emphasis is not to open an exclusive brand outlet to retain our share, but at the same time we have an opportunity to grow in our multi-brand outlets as well, especially for mobile phones, because it is a very dynamic category and a very big category. So I would compare it to like a ocean compared to other categories which would be much smaller in size. So there the demand and the supply makes a lot of difference. So we've got to keep a lot of other things under check for selling mobile phones than just having a presence there.
Sure. My second question is on your FY'25 store opening. Do you see in Telangana and Andhra market there are enough spaces in tier 2, tier 3 cities for you to continue to expand? And do you think there a smaller store format between two cities can also be worked out like a hub and spoke model where you can open up 4,000, 5,000 square feet store if a customer wants to give a 2-day delivery kind of a thing, while you cherish giving a same day delivery for ACs and others, but predominantly in a smaller city while you can have a store but a smaller store with a 2-day fulfillment kind of a thing?
Absolutely right again. So given an opportunity there, if the market size demands a lesser, smaller size store, we would do that. Obviously, we would not open a really big store. But if you look at our tier 3, 4 town stores that we opened lately, or we are opening right now and expanding because the market is still untouched in few of the areas in Andhra and Telangana both. So there we limit ourselves to something between 6,000-7,000 also. So not necessarily, but 4,000, 5,000, little smaller. Would be a little smaller for us, but 6,000-7,000 is what we would look at rather than doing a 10,000-15,000 square feet store.
So let me put it the other way. If I look at 3 years out, right, where you are opening around high teen stores in these two states, do you think that growth can continue for 3 years for you to open these stores, and you can pilot with a, that 6-7 square feet store format, see the experience today and then probably expand 3 years out?
See, that can be done. So if suppose we say again, we don't lock ourselves into a certain format of stores. if given an opportunity, market grows, that store particularly delivers a higher number, probably we might do a second store in the same city. Like for example, after 5 years of operation in Guntur city in Andhra Pradesh, we opened 2 more stores at the same time in that city. So now we have 3 stores. But our competition has 8 stores in that region, the same city periphery. So when I look at my overall number, especially coming in from Andhra, today my Andhra stores have delivered approximately 800 crore plus of business, right? But if I look at my direct competitor there, which is Sono Vision, Vijay Digital, these are all guys which are upward of 700, 800 crore, 1,000, 1,500 crore business, So we see a great opportunity. Our store count is less than half, in terms of bigger partners like Reliance also. Sono Vision has 60 plus stores. We are still operating 38, 39 stores in that region. So we still see that there is a huge opportunity for us to go, especially with the under-penetrated mobile phone as a category there. So today, if you look at our product mix in that region, especially on mobile phones, it is still a little under-penetrated compared to our other city stores. So we feel that there is a huge opportunity for mobile as a category to grow in our store, for large appliances to grow in our store, for air conditioners to grow in our store, especially with the new store openings that we're doing there right now.
Sure. And the last question is on the warehousing in Delhi. When you started Delhi, the idea was initially you need to keep a lot of inventory in Delhi because we have lesser number of stores, and as the number of stores, we'll get that leverage out. So today, where you have, mid-teen stores in Delhi, NCR region, how does that throughput play out, and are you happy with that warehouse capacity, and has the inventory remained the same, or only the store level inventory happening in the Delhi market, and is that playing out according to the plan?
Yes, sir, that is on track. So whenever required, so we already have like 14 stores in pipeline today in Delhi NCR region for the next 12 months, right? So we opened 6 on the 30th of March in Q4 FY'24, and then we've got another 14 stores in the pipeline which will open in the next 8 to 12 months, right? So when we know that something is opening up and something is going to come up in the next couple of months, we would rather look at, our warehousing to be ready to take up those stores as well in the future. So that's how we planned, and we've got 3 warehouses now. So now once we expand further down more in Haryana or towards Gurgaon, we'll probably come up with 1 more warehouse in that region. Because right now we would be doing Delhi city, UP and then Haryana, and then penetrate further down in these regions. So then we would eventually need more warehouses, a bigger warehouse in that region. So as per time, we would definitely expand and grow. Right now it is in sync with what we would need. And this being summer season, anyways we've stocked up more and we've filled up stocks in the warehousing required for the summer period.
Sure. Thank you so much and all the best.
Thank you, Ankit.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Miyush Gandhi from Cognizant Capital. Please go ahead.
Hi, am I audible?
Yes.
Hi, Karan. I just wanted to know what are our plans in terms of new store opening for the year? You mentioned 14 in NCR. How many are we planning overall?
So we would be doing around 30 plus stores in this financial year, out of which we've already opened 6 in the first quarter itself, and then another 5 are getting ready, which are due opening in the next 30 to 40 days. So probably this quarter, the first quarter itself, you will see opening of first 10 stores out of the 30 store count that we planned for this financial year.
Okay, fair enough. And I just wanted to maybe get a sense from you, as the density of our own stores in South region increases, are you seeing any signs of cannibalizing?
Oh yes, definitely. In fact, we try to cannibalize our own stores because what happens is, especially for the peak days or the bigger days, because our competition works in clusters. So usually you don't want to lose out a lot of sales from your top performing stores or growing stores, right? So you then try to cannibalize your own stores a little bit because then you tap into a new geography, a new market in that same periphery, and try to create a new customer base along with, cannibalizing your own customer base from your existing stores nearby.
But then, I understand that overall throughput increases, but what it also causes is that per store sales goes down, and also the return on capital employed also starts reducing. So any sense on how do you calculation?
So there's a calculation on how and when we do it. It is not necessary that we start doing it, try to cannibalize the store which is at 30-40 crores on an average. So whenever we try to do it, these are for all the stores which are 100 crore plus for us, for example, that way.
Okay. And any sense on how is the return profile for our Tier 2, Tier 3 stores? Like the experience of new stores that we've opened in last 2-3 years. How has it been? Are they at par with the company average, or are we diluting a little bit there? Any sense on those?
So definitely, yes, the throughput would be a little lower than your metro cities because of your premium product selling there, or your high-end not selling in the larger number there. In terms of the volumes are there, but the value or ASPs would be little lower comparatively, right? Number one. Number two, so in line with what growth we would look at for those stores coming in year 1, year 2, year 3, whereas the base for that particular, so if I open a store in Hyderabad, I would look at 30-35 crores in year 1, then eventually go to 45-50 crores year 2, and then averaging around 60 crores in year 3 onwards, right, for a Hyderabad metro store. But if I look at a store in a tier 2 or a tier 3 town, I would start looking at 25-30 crores in year 1, then 35 crores in year 2, then stabilize it by 40 crores in year 3 onwards. So that is the throughput that I would look at there, because the incremental growth coming in would not be higher than 15-20% for the first few years, and then eventually stabilizing at around 35-40 crores on average once you start maturing from there on.
Okay, fair enough. That's it from my side. Thanks.
Thank you.
Thank you. The next question is from the line of Gautam Goyal from HCMR Private Limited. Please go ahead.
Hi, Anna. Hi. Yeah. So my question is basically like, could you please explain us more on the store unit economics? So like, what is the capex investment? Working capital you've already mentioned that you probably do around 2.5 to 3 crores. But like, what's the capex investment, and what is the payback period, and like a break even for us for in the store?
Sure. So how we would do the math is, we will say approximately if you're taking a 10,000 square feet store, we will look at a capex investment around 2,500 rupees a square foot. So that would be around 2.5 crore rupees for making up the store, and then around 2.5 crore rupees of inventory. And this inventory would be majorly for the displays of stock, and then a little bit towards the backup stock for the over-the-counter product delivery from the same store. And then during seasons, in different seasons, that is 2 big seasons in a year, then we would look at this number going up a little higher for the backup inventory, especially for summer if it's cooling products, and for all the product mix during the Dussehra Diwali period in October-November quarter. That is how we look at. So around 3 crore rupees, 2.5 crore rupees of inventory and 2.5 crore rupees of capex. Around 5 crore rupees is what we look at. It has a store cost initially when we set up a new store of a 10,000 square feet area.
All right. So what is the break even for that? Like any break even or payback periods that we can?
Oh yeah. So for existing market where the brand is already known, or if you're opening a store in AP, Telangana, Hyderabad, so what we would look at is the break even would be around 12 to 14 months because we are much established here. There are no additional costs here, stuff like that. Whereas if I look at a Delhi NCR market, which is quite new to us, which is a year and a half, 2 years approximately, so that region would give us that turnaround in 20 to 24 months.
20 to 24 months. All right.
Yeah.
And certain questions are like what would be our growth expansion for like the next years? Like, so are we exploring new spaces, new countries, new cities and all, new states, or like we are contented by the fact that we'll just grow more in Hyderabad, Telangana, Andhra Pradesh and Delhi NCR region?
So right now, say for example, we are quite new in Delhi NCR, and then there are a lot of huge periphery available in Delhi NCR, right? So we're talking about the whole of GT Canal Road up till Chandigarh, Panchkula, and then eventually Punjab. We're talking about Western UP right now, where we already have stores in say Ghaziabad and Noida. Then we expand into Greater Noida in the coming times, and from there up to the whole of UP is available for you. Then you're talking about AP Telangana as a periphery. You're talking about borders of AP Telangana that are available, probably Orissa in the next coming years. So that way the geography that we are present in, we would like to explore few of these regions nearby, especially strengthening ourselves more up north, because that is more of a bigger market size than what we would do down south here in the neighboring states like Orissa for us.
So like basically we are saturated in like states like Andhra Pradesh and Telangana. So we're not like majorly focusing on expanding there. We are focusing on the north market right now. Am I correct?
So right now it will be more of 50-50 mix up north and down south, because there are a lot of markets that we don't even have a store here. So AP Telangana expansion will go on, and then with that what happens is that organically every year, whichever city you've already entered in the past, you would see a new market developing in the same city. So organically also you need to expand in those territory, because if you start losing out to your competition, or you don't get the benefit of inventories, marketing and all, so there's no point of you opening a new territory when we've not captured our own territory completely first.
Okay, got it. And just last question from my side. So, like, from the revenue point of view, what is the split between the financing and, direct purchases in the urban metro cities and in the tier 2, tier 3 towns?
So, the total blended would be around 65-35, 65 being through credit card, paper financing, other financing activities on the floor, versus 35% through UPI, direct payments, and cash payments. So that is the major split across metro as well as upcountry market. There will be a difference of 1 or 2% here or there.
Okay. And this is for tier 2, like the number for financing, I guess, would increase a bit for the tier 2 or tier 3 stores?
No, yeah, it's similar line only. So there what happens is that in fact, south and west in India, anyways, tier 2, 3 towns also quite strong with NBFCs. Whereas you talk about east or fewer pockets up north, then the transactions on NBFCs would be little lower because the penetration there on debit card, credit cards or other financing activities would be higher there.
Okay, got it. Thank you very much from my side and all the best for the future.
Thank you, Gautam.
Thank you. The next question is from the line of Arnav Shah, who is a retail investor. Please go ahead.
Hi, sir. Thank you for taking my question. So, I noticed that the company's product mix is the revenue from mobile phones has increased from 38% to 43%. So, could you give guidance on the future product mix?
So Anurji, the product mix for mobiles or these other categories will more or less remain in the same tune. So we would not see a drastic jump here. But then as I told you that earlier on the call also, like few of our markets, like in Andhra also, if you look at the penetration there for mobile phone is still a little lower. I would, look at that going up by 1 or 2 more percentage in the coming time. But it will not drastically change from here on going forward.
Okay, sir. Thank you. And in extension to that question, could you guide us on the gross margins that you enjoy in each of the segments between mobile phones and large appliances and small appliances?
So Anurji, I'll just give you a broader number. So for blended number, it would be what you would see on a balance sheet around 15%. And the lowest I would tell you would be around 7 to 8% for IT mobile as a category. And the larger appliances would be upwards of say 17-18%. So that would be the average out for the blended would be around 15% for all product categories.
Okay. Thank you, sir. That answers all my questions.
Thank you, Anuji.
Thank you. Ladies and gentlemen, we will take that as the last question. I would now like to hand the conference over to the management for closing comments.
I would like to thank all of you for joining into the call. I hope that we were able to answer all your questions. And for any further inquiries, you may get in touch with us or our IR partners, SGA. We will be happy to address your queries. Thank you once again, everybody.
On behalf of Electronics Mart India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.